will start today's session with a conversation with Nick Adams, Managing Partner and Co-Founder of Differential Ventures. Nick, welcome to the show.
Great, thanks, good to be here.
Nick, tell us a bit about yourself as well as about Differential Ventures. Let's get you acquainted with our audience.
Yeah, sure. So, at the high level, our fund is a seed stage fund. We usually invest somewhere around $250,000 to $1 million for our first check-in to pretty early stage companies. We have a heavy focus on the data science, AI, machine learning world, particularly with B2B applications. So we don't do a whole lot on the consumer side of things, but in the enterprise, we're really looking at how data can transform the way businesses will operate in the future. And then for my personal background, that's, I came up through the startup world. So I spent about 15 years in startups of different sizes and different varieties, mostly with a focus on enterprise sales, marketing, and product management. Kind of did everything from launching the U.S. operations for a company based in Europe to working with a hugely successful back then big data company called OPower, and then later on running a team in India and launching a natural language processing engine for a company called Rage Frameworks out of Boston that was later acquired by Genpact. So that's my background, and my other two partners have pretty complementary backgrounds themselves. My partner Mitchell is a longer term VC and previously ran 8 or 9 businesses across his career. And then my partner David Magerman is really our technical resource, PhD in computer science from Stanford, and really built his career, is well known in the hedge fund world for being one of the primary people behind building the hugely successful algorithms at Renaissance Technologies.
All right. And what size fund is Differential Ventures?
We're investing out of our Fund 1, which is a $20 million seed stage fund.
Okay. And tell us a bit about how do you define seed, and specifically address the issue that, the seed stage ecosystem has fragmented quite a bit, people doing pre-seed, seed, post-seed, pre-series A, small series A, large series A. There's a whole spectrum of stuff. Even before that, there's friends and family. So what do you like to see? I think the way I phrase it, instead of trying to get into terminology, I try to phrase it as, what do you want to see by way of proof point before you're willing to consider an investment?
Yeah, I mean, we will absolutely invest pre-revenue. Actually, probably more than about half our portfolio today, our first check-in was pre-revenue. So we're looking for generally some sort of MVP, but primarily we're looking for founder market fit and timing of the market, in our opinion anyway, and in our research. So, what we tend to look for is, why is this team, why is this founder uniquely qualified to do what they're doing? Is it a past experience? Is it their academic experience? Is it some unique connection that they have in the industry to be able to get ahead of the competition? And likewise, is it something we can do specifically to help them? Short of that, then traction is definitely helpful to prove that what you're doing is working. But we don't have a specific revenue number or target that we're particularly looking for. So going back,
is the product done, or that's not a requirement?
Say that again.
You want to see an MVP of the product done?
Ideally, not necessary, but ideally, yeah. We tend to gravitate towards more technical founders. So there's usually some product in place or a product-led approach to the company as a whole. So yeah, I think it's pretty common. Where it's pretty rare for us to take a pitch deck or the back of a napkin and invest at that stage.
And what about geography? Where do you like your founders to be?
So most of our founders are on the East Coast of the U.S. About 50% of our portfolio is somewhere between Boston and Atlanta. About 25% of our portfolio is in Canada, particularly in Toronto. And then about 25% of our portfolio is based over in Israel.
Okay. And double click down a little bit on what kinds of businesses. You said enterprise, you said data science, AI-oriented stuff. Can you double click down a bit and add some color to what are you looking to invest in and what have you invested in?
Yeah, sure. So I would break it down into three categories, right? So we're broadly looking at the future of work, but specifically with how data and how data science can change the way businesses actually operate today, which we think, the opportunity is still very large, and most large enterprises in particular are still at the early days of making information actionable. So we look at the full spectrum of data from, collecting it to interpreting it, and then also, securing it on the back end. And we look at that from, I would say, three layers of technology. So on the back end, we look at infrastructure type platforms. So things like model monitoring, or infrastructure around performance optimization, to make models work more efficiently, more effectively, more cost effectively. And then we go up to a platform level. So how can we enable data scientists and data engineers to better build and enable, facilitate data science throughout an entire organization. And then, thirdly is kind of, the applied AI. So what specific use cases can be deployed within an organization. And generally when we do an applied AI platform, we're looking for something that, on the front end has a, let's say, transaction by transaction value proposition to it, either helping a company sell more or cut costs. And at the same time are gathering and collecting a potentially really valuable set of data that we can interpret, analyze, and make use of down the road for analytics or other purposes.
And what is the future of work context to this? You started by saying you look at it from a future of work point of view. I didn't get the connection.
I think the future of work is going to be largely driven by data. That today, I think, enterprises are still at the, are doing a better job of collecting data. I think, most companies are still at kind of the big data stage, but are still really, really new in terms of data analysis and how to apply that throughout the organization in reliable and unbiased ways.
I got it. So your interpretation of future of work as a terminology is a bit different from, the way the future of work soundbite is being interpreted a lot is, this remote work, virtual work, and especially with this COVID-19 situation, everybody is talking about future of work being virtual and all of that. So that's not what you're referring to. You're referring to general workflows in enterprises that are becoming more data-driven and automated.
Well, I would call that where work is happening. I think we're just more interested in how decisions get made. And
understood. That's what I'm saying. What you are referring to as future of work is not the terminology that is floating around extensively at the moment on future of work is vastly about remote work. So anyway, regardless, I understand what you're doing. Now, let's do a couple of examples of things that you have invested in. And in doing so, tell us anecdotally, how did you encounter these companies and what was in those companies that caught your attention enough for you to want to write checks? What you're trying to get at is how you think about investments.
Yeah, so one of our earliest investments was a company here in New York called Ocrolus. They do data extraction, validation, and analysis of underwriting documents for alternative lenders, mortgage lenders, financial services, accounts payable, departments like that. So really any paper-intensive, data-intensive business process that's tied to some financial outcome, whether it be a loan, a mortgage, paying a bill, whatever. Met them through an angel investor here in New York that we know pretty well, who had actually written a small check into this company early on. The company had been around for maybe 2 or 3 years at that point and had started out really working with small accounting firms, law firms, really the SMB market, and had just started to get traction in this alternative lending space. And it happened to be a business I knew pretty well from my days at Rage Frameworks. And when I met Sam and Vic, the CEO and COO of the company, I was really blown away by how efficient and effective they were in terms of their costs and back-end operations to scale up what they were doing. Being familiar with the space, their cost to process a transaction was about a third of what mine was just a few years earlier. So I knew they were doing something, A, operationally brilliant, and B, technically really well thought out. And to be honest with you, I spent 2 or 3 months kind of meeting with them repeatedly, talking with them, digging into their processes. I just didn't believe it. I thought they were wrong, or I thought they were not being forthcoming with me. And the more and more I dug into it, it was clear that they were just operationally brilliant. So we got on board.
What were they doing that was brilliant? Can you elaborate?
I can't share all of that, but they've done a couple things around how they structure their team, both on the technology front end of things and in their back end operations in India, to just be really, really efficient and highly accurate. So they can, basically take a bank statement, let's say, from somebody looking to get a loan, and turn that around in the matter of, minutes, with 99% plus accuracy, at a very low cost. So it's really a very tight integration between the technology that they're using, and the resources that they use to do any error correcting on the back end.
And this is an enterprise technology selling to banks?
Yeah, banks and alternative lenders. So if you know companies like Lending Club, Funding Circle, Cabbage, groups like that, was kind of their initial, where the bulk of their customers were up until pretty recently. So that was it, and it was kind of a funny point. This is one I would have called more on the late seed side of things. So we finalized our investment in early 2018 as part of a seed round that was still open, but the Series A actually closed within a few days later, led by Bullpen Capital and QED here in the U.S. So for us, we just saw this was a case where the founder didn't necessarily have a technical background, but he was a just natural, really good entrepreneur and figured out how to sell something. And when he brought in, when Sam and Vic got together, is when we really saw the operational efficiency and the technology efficiency start to play out. And you can see about 6 months after Vic joined the company, their margins, turned remarkably profitable. So we knew we kind of had that balance of a sales-oriented CEO that can go out there and find customers and build revenue, and a technical/operations leader that could kind of run the house and make sure that everything's working really smoothly on the back end. And it's been a winning team. They raised their Series B last year.
Well, let's do another one, just to get a flavor of your investments.
Yeah, I'll give another recent one. A company called Naukri, that's based in Toronto. They were introduced to us by one of our other founders, a company we invested in Toronto also. And it was a really interesting story. The team was Jahan Ansari is the CEO, and his previous startup had failed, and they were looking for jobs. and he was struggling to find a job in the Toronto market, and felt there was a lot of bias in the process, and that he was being filtered out, unreasonably so, by hiring managers. So he kept tinkering with his name on resumes, and ended up as Jason Ansari, and was hired 2 weeks later. So it's actually an amazing story, sort of a sad story, but also yeah, but really impactful, and resonated with me and with our team. So from that, and Jahanpeb and his co-founders, Maz and Faisal, are just really entrepreneurial team of guys, and they started this company Naukri, which is actually doing sentiment analysis of video interviews. So for a lot of companies, particularly big companies, largely in the consulting or customer-facing world, IBM, for example, is one of their largest customers. A lot of the applicants for certain roles go through a video interview before they ever actually, meet somebody within the company. And Naukri plugs into, a WebEx or a Zoom or other video platforms that companies are using, and really marries together natural language understanding along with some analysis of facial features to not necessarily make a yes or no recommendation to hiring managers, but puts the combination of those, puts the analysis of those two features together into a rating across several different characteristics that hiring managers are generally looking for anyway, and is usually happening at a human level anyway, that we're think we're quite good at, but usually actually really bad at, with different our own biases and so forth. And it's worked. They've taken a I would say simple and a good way approach to doing this that's also compliant with a lot of regulation that's popping up in the market today, that's making things harder for some of the competition that's trying to make an actual recommendation as to whether or not you should hire somebody or not. And they've built out some really intelligent models on the back end, where my partner David is really coming in and helping them to make sure there is a really diverse base of data sets being used to train the application, and monitoring it over time for any bias or drift within the algorithms themselves. So we really like it. And then, with everything going on globally with the pandemic around COVID-19, there aren't a whole lot of in-person interviews right now. So it's been a real spike in demand, and I think another layer or increase the importance of cost effectiveness, and also safety around remote hiring. So for this, there's a combination of
a good segue into what I was going to ask you is, what kind of impact is this COVID discontinuity having on this company? This is the perfect company that should be booming in this environment. What are you seeing? Like, what level of lift?
Quite a bit. It's still new. I think as a VC, somebody who's been in technology for quite a while, transitioning to working from home was quite easy for us. We do it all the time, and if we can't adopt to working remotely, then shame on us. Probably not good for us or our investors. Not a good sign for us. So it was easy for us, but a lot of big companies are still struggling to kind of churn through this. And like you said earlier, Shamana, like, how do you actually get people online and going through the pain of logging into VPNs and all of that stuff? So we've seen an awful lot of lift, and the new pipeline has just exploded for them. But we don't know yet. I think it's very much going to be counter-cyclical to a lot of the economy. Yeah, and we're exploring some things, and I think there's some. We just got the jobs reports here in the U.S., and 30 million people have filed for unemployment last month, which is horrifying. So I'm really hoping that we don't have this completely locked in yet, but I'm really hoping Naukri can be just a value-adding partner to help get people back to work in a safe and cost-effective way in the not-too-distant future.
Now, I've been in this industry for a long time, and I've seen a few cycles, like I'm sure you have too. When we have discontinuities, every VC firm goes through a process of considering that discontinuity and developing a thesis around what kinds of companies should be, doing well in this environment. And we just discussed one of your companies that is a perfect example of this, of a company that is counter-cyclical and benefits from this continuity. Do you have a broader thesis on the kinds of companies you're looking for? Because, our community is full of entrepreneurs, obviously. So are there types of companies or problems that you would like to solve, that you'd like to find a company to solve?
Yeah, it's a great question. I'm going to be totally transparent with you and say, sort of. So the answer is yes. So I'm hoping in 10 years, Sharmana, we can do this again, and I'm going to tell you, I'm the most brilliant VC on earth, and I planned all this perfectly. The truth of the matter is we closed Fund 1 formally on February 29th, right before this all ended. We had 11 companies in the portfolio already. We had 10 done at that point. Our last two investments that came literally days or weeks before this crisis hit, one was Nakri, and the other is a company out of Israel called Siolo that is basically a one or two click way to access the tools and applications you need at the enterprise level without actually going all the way into the network. So a much simpler and probably more secure version of VPN, and probably even more so than Nakri. These guys have been remarkably counter-cyclical because everybody is struggling to get people online more quickly, more securely, and so forth. So I'm going to tell you that it was brilliant. We knew this was all coming, and this is exactly what we planned for. But that would be a lie. But the truth is, I think we do have to plan on having, as you said earlier, more remote work. How do we get people online and connected much more efficiently and effectively and securely? Because times like these tend to also breed a lot of other cyber attacks and hacks that put everything at risk. So I would say, getting people online safely, securely is still very interesting for us. We would absolutely make other investments in that space, next to Siolo or a Nakri. I think that this is the time actually where, and I'll give one example in kind of the U.S. and some of the Western world, and then one more developing example. In the Western world, I think this is where, a lot of the traditional types of businesses, enterprises that have really been slow to adopt technology, even just fundamental things like, DocuSign or easier to use VPN solutions.
Oh, absolutely. I have all those stocks, DocuSign, Okta, and RingCentral, and they're all booming.
Yeah, exactly. I think a lot of these just fundamental, core platforms are going to really be adopted in places like government, financial services, and the healthcare system because it's necessary now. I think for the first time we'll really get over the hump. In some of the more developing worlds, I'm actually really interested. I'm not sure if I can invest in this space because I've worked there before and it's grueling. But in the energy world, in a lot of sustainability type of platforms, and just I would say modernizing and hardening infrastructure. I still think places like India and Africa, where I've spent some time in India at least, have amazing opportunities to leapfrog a lot of the rest of the world in some of these ways. Lots of hurdles, of course. Probably takes a bigger fund than ours to really support that. But we're interested in interesting opportunities there.
So one of the areas that I think is going to be a big area after this, it was already big, but I think it's going to become much bigger, is the industrial AI and machine learning as the supply chains try to become more resilient and self-sufficient. So there's a lot of the factories that supply the U.S. supply chain are going to try to come onshore. And those are not going to be human-powered factories. They're going to be largely automated factories. So there's got to be a huge boom in industrial automation.
Yeah, I agree with you. There's there's a few different ways this can really play out. I think, barring much change at the political level in the current administration, we're probably prone to going into more of an isolationist type of future for the next several years, which I think would bring a lot of manufacturing back into the U.S. and back into places like Germany. Not necessarily true. I actually, I think with a change in administration and maybe even some other factors, I still see globalization having a chance. I can see, places like China really undercutting their own prices to make sure that they retain their market share in manufacturing, for example. But either way, technology is going to be the leader behind it. Especially here in the U.S., it's kind of, it's a whole confluence of factors out there that actually really, I think, as much as we invest in machine learning and data science and AI as a fund, there are some social things that really scare me around, the readiness of this technology now and replacing a lot of jobs that may not come back, because in addition to technology, the crisis, the health concerns, there's also significant tax benefits for U.S. corporations since late 2017, that were really positioned as investing in manufacturing and shops and factories, but it is really promoting more technology that will create some new jobs, but also displace a lot of people. So one thing I'm always interested in, it's hard from a technology perspective, but even just as a human being and as a philanthropist to the extent I can be, is just how do we retrain people and find new homes for them in the workplace is always really compelling.
Yeah, I think there's a huge question mark around the 30 million people as of today. The last reports that are out of jobs in the U.S. and globally, it's a much bigger number. What percentage of these are going to come back? What percentage of these are going to become the victims of this accelerated automation trend, which was already in full swing? The automation trend was already in full swing, and this is just going to accelerate that trend. That part really is very worrisome and cumbersome. I wrote a series, if you're interested in this topic, called Man and Superman. It's on our blog. So it's really going through the whole philosophical and economic, etc., of this this trend, essentially. So,
yeah.
I want to switch to the entrepreneur pitches, and there seems to be already a lot of questions in the public chat. We'll get to your questions, folks. Do not lose patience, but we have to go through the scheduled entrepreneur pitches. Nick, you're staying for the pitches, yeah?
Yes.